Good afternoon, everyone. Scott G with the Simple Trading Life here. Hope you're enjoying your Friday afternoon. It is about 20 seconds until 2 p.m., so I'm coming live just a minute early here. In fact, I just got my alert that I am live. So let me bring up the comments, because I definitely want to be able to see everyone and if anybody has any questions. And where I'm typing hello, if you're new, that is where you would type in any questions or comments, or just say hello, tell me who you are, where you're from. And really appreciate everyone's support. So we'll give it just a minute or so till some people can join in. I think we just got a couple in here right now. And we have our 30-minute chart as normal of ES up on the screen. So we'll be doing a little bit of analysis on the market here in just a few minutes. Then we'll look at some other names, and we'll try to wrap this one up a little bit early today. I normally go till about 3 to 3:30. My wife, actually it's my 6-year-old, has a play date today, and one of the neighbor kids is coming over right around 3 o'clock or shortly after. So things could get loud in the household when you get a couple of 6-year-olds running around and screaming and playing. So probably try to wrap this up slightly early today, but we'll see how everything goes. Looks like we got a couple more people joining in, so hello to everyone. Make sure to say hi, maybe type your name and where you're from in the comments, especially if you're somebody new. A lot of our regulars, I know who they are. Several of them are in our simpletradinglife.com community. So if you are new, you can check us out there, simpletradinglife.com. As you can see, looks like ES is trying to continue the upward movement that it's had since 11 o'clock. So here's where we opened. We'll just go ahead and kind of start going through some things, and people will join in as they have time. This purple dash line is opening price level, and our first move was to the upside. And we know, I stress this all the time, typically, most of the time, the initial move of the day is the opposite of the direction they want to take it early. So as you can see, here was the initial move, and then they flushed it down to here, and then price bounced back up right here. On this initial candle, this is a 30-minute chart. You can see this right up here. I am currently, I'll talk a little bit more about this in a few minutes. I'm trying to get an account set up with Tradeovate, which is a futures-only broker that offers some pretty neat features. We'll take a look at that here in a minute. But having all kinds of issues. So far, not been impressed with the customer service, but they have come highly recommended from several traders I know, including a couple of professional futures scalpers, which is primarily what I am. And anyway, I am able to access the simulated system because my account's been approved and the account's been set up. They just have not transferred my funds into my live account. There seems to be some hiccup with with some clerical issue with their clearing firm, and I sent that over on Wednesday. It is now Friday after 2. They received the funds on Wednesday, still not in my account. So a little bit unhappy about that, but let's go back up here. As you can see, we're getting another pop on ES. If they can clear and hold these wicks, we can probably at least get up to around this range up here, up around 29.49 to 29.49.50. Hey, Rodolfo. I have been feeling better the last couple of days. Monday and Tuesday, I had kind of rough days. The last weekend, I was pretty good. And Wednesday, Thursday, Friday, meaning today, I've felt pretty good. So thank you so much for asking. Appreciate your concern. So here we go. We got ES spiking. And again, we're looking for it to at least get up around here if it clears and holds right here. Yeah, Rodolfo, I may have to do that. I may have to just break down and go see a doctor or a clinic and get some blood work done. I've tried to regulate my diet a little bit better, eating at like the same general times every day, things like that, because I do have low blood sugar, but I usually can control that fairly well. But sometimes I get busy and I do forget to eat when I should and things like that. But anyway, so we got ES still spiking here. Okay, I've got my cursor over here. Okay, where I said that it should be able to make it up around this area. I mean, it's close now. We're looking at 29.49 to 20.49.50. And anybody who's watching, you may be asking, why am I saying that? Well, that's because we have a pivot right here. Okay, you see this move up and then this strong move to the downside. So we have this pivot area across there that will typically act as some resistance. It also gives you a take profit target if you're taking this trade. Now, what trade might you be asking? If I come back over here, you'll see we have this hammer right here. We would call that a momentum hammer. All right, and what that means is the trend is going this direction. Typically, we play hammers towards the bottom of a trend or a strong move down. But when you get a hammer, okay, like this in a trend and it breaks to the upside, we call this a momentum hammer. So if you would have took the trade here, that is a break of 29, basically 29.45. Okay, that would have been the break. It's already went as high as 29.48.75. So if you're playing standard contracts, okay, that's good money. Options, I'm just guessing, but options, which I mostly trade, but $3.75 move, maybe you made 50 to $100 because the move did happen pretty quickly, which is to your benefit when you're trading options. But a standard contract, you would have just made the ticks, right? So let's just say $3.50. Every dollar is $50, so there's 150. And then 25 more, so that would have been a $175 move in a matter of just a couple of minutes. Okay, and it looks like it's still trying to get up to that area where I pointed out. A couple more folks have joined us, so welcome. Please remember to give us a thumbs up and subscribe to the channel if you're brand new. And definitely turn on your notifications bell. That way you'll know anytime we go live. I keep looking down because I see flashes, and this is where I have your comments. Okay, there we go. We hit the area that I said we were likely to get to. Okay, if I was actually taking a real trade, that would have been my take profit target right there. And we just hit it. See, we just hit it. 29.49 to 29.49.50 was my target area there, and I'm very conservative, so I'm always getting out to the short side of my targets. Excuse me. The reason I do that is because I don't want things to bounce against me like you see here, right? Because at one time this was a big green candle, and then it bounced. This was a big green candle, and then it bounced. Okay. Vice versa, this was a big red candle. This was a big red candle, big bounces. Okay? So that's why if I say that my target is 29.49 to 29.49.50, I'm definitely getting out easily at 29.49, maybe even 29.48.75, because I just don't want something to bounce against me. And we are expecting at least a little bit of resistance here because, again, this is a pivot. Okay, and we'll talk a little bit more about that here as we go along. Okay, a pivot obviously showed a change of momentum or a change of sentiment. So if we come back over here, okay, we come down, come back up, and we chop, 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 chop. We came down, we came up, and then here's the pivot I'm talking about, and then we pivoted and we had this strong move down. So this pivot right here showed a change of sentiment. Okay, buyers were in control up until this point. Then we put in this spinning top, and then we started to move down. And as you can see, once we took the bottom of that spinning top out, okay, other than bouncing here at support, okay, we bounced at support, we had that strong move down there, level of structure, strong move down to this level of support at 29.04. Then we started our climb back up. And then we had a level of structure, which was this morning, and then climb back up. Okay, so here we have a higher high, higher low, higher high. Once we took out this wick, we now have a higher high. But that's why I was showing you the pivot here, and why I was saying that would have been my take profit target, was right on the underside of this body right here, which we made. So hopefully that makes sense. Getting some more people. Welcome, everyone. Still looking at ES, the market, S&P 500. So let's just kind of zero in on today for right now. Okay, so for today, this was our opening candle for regular trading hours at 9:30. And like I said, we got our little spike up, and then once price reversed and came back down through here, on the Trade-Evate simulated platform, I took 2 trades. So the first trade I took was once we came back through here down to just above this support level. Now, as you can see, it did break through, but once again, I'm conservative. So where I entered and where I exited, I made exactly $200. And that's, again, on their simulated account because obviously, as I said, so far they have not got my funds in my live account yet. Then I waited and I was trying to see, are we going to break again and go lower? So it did start to poke through, and I entered a trade and I had a stop at 62.50 and it hit my stop. So on those 2 trades, I profited 200 and then I had a loss on a stop out of 62.50. Okay, still up, right? Still up. What would that be? 137.50. And then it did go lower, but that's fine, right? That's fine. And actually, my target would have been the top of this candle right here, and it didn't make it on that first try. So then I was looking to see, are we going to get a break and a retest, right? A break and a retest, and then a go. Well, we got the break. We came back and we actually pushed way up here. It did kind of start to come down. I didn't take any of these trades. Then it pushed back up. Here, somebody may have said, and I actually had somebody in the room ask me about this in our room, simpletradinglife.com room. How did I know not to take this? Well, first of all, I just wasn't actively trading today because I'm having these issues with Trade-Evate. But okay, this would be a decent looking hammer. However, look at this. Okay, look how price was just sort of ranging here. We tried to go down once, big rejection. Tried to go down twice, big rejection. I would just be concerned that we're in a little bit of a chop zone here because I wouldn't be able to see any of that, right? Let me get back over here. I wouldn't be able to see anything over there. It would be happening in real time. Plus, we have opening price level and the 200 above. We consider those obstacles. Okay, so I wouldn't just be necessarily thrilled to necessarily jump into this. Now, if this hammer, this one right here, would come at the bottom of something like this, and then we'd have this hammer, like say instead of this candle bouncing off of this, I would be all over that. Okay, those are the trades that I really look for. Those are the ones that can pay off big time, right? Right location, bouncing off support, nice long wick showing how the buyers have come back in and taken control. Then you just enter here. And if it happens down here, you've got plenty of room to run. Okay, you see, excuse me, right here. If it would happen like somewhere like here, now you've got plenty of room to run until you get up here to the 20 or even the next level of resistance or the 200. So that's the difference, okay? Because I wouldn't have known what was coming next, but that's why I wouldn't have been thrilled about it. Okay, and then look what happened. Barely poked up, hit both the 200 and opening price level, and then flush, right? So unless you have your stop set, okay, if you can, right? Not every platform allows you to set mechanical stops on futures. So if you have your stop set, you might be all right. But if not, and you're in manual stop and it starts to flush and it takes you a couple times to get out, you could lose some money there. Next candle, next candle. That's where we started to turn around, right here. Okay, not a huge buying signal for me personally. Okay, we'll look at some other time frames and see if there was anything on a different time frame. Okay, but ever since 11 o'clock in the morning, you can see we've been moving to the upside. We have been moving to the upside. And so far, the high of this candle is 29.4975. Remember, I told you my target was 29.49 to 29.4950. So it got right up to that area, and we are seeing a little bit of resistance right now. But here on the 30-minute, which I trade mostly, okay, that's not necessarily a huge buying signal for me right there, but we're going to look at some other time frames in a minute. But here, that's a momentum hammer if the top gets taken out. Now, I have friends, I have people in my room, they like when they see, they'll call it a hanging man, right? At the top of a move up, they're looking for it to go down. Now, like what I tell all my friends who look for that, it's not one of my favorite patterns. And I believe when you back test it, you'll find that these end up being momentum hammers more often than they do reversals of momentum. So I had somebody one day point out, some examples, and I said, absolutely, you're only pointing out the ones that worked, right? Because that's how your eyes are trained. I went back through and showed them all the times that it didn't work, that it was actually a momentum hammer signaling continued momentum. There's a bunch of other ways where you can add certain factors in to know, is it more likely to be momentum or is it more likely to be a change of momentum and then start heading the other way? But for the most part, I do not like hanging men, meaning I'm calling this as a reversal back down, as much as I like momentum hammers if it makes sense to the upside. Now here, okay, the reason I like it is this candle closed above the 200 and above opening price level. You have these wicks over here. That's your first concern, right? But if you take them out, then you knew, let me close this back in, then you knew that you were likely to make it up into here, which it did. Okay, so it's all probabilities. That's all trading is putting the best possible trades with the highest probabilities in your favor. So you could have took it down here, you could have wrote it up here, and then sold at your my take profit target. I don't know what yours would have been, but I'm conservative. And let's just say it couldn't get through these wicks, right? You could have your stop, maybe either below this body, or what I like to do, if I'm playing the standard contracts, as soon as I get, if I'm shooting for a target that's more than $100, okay, as soon as that target is now, I'm in $125, $150 in profit, I move my stop at least up into profitability, at least to 25 or 37.50 in profit. And that way, even if it reverses against me and I get stopped out, I'm going to make a few bucks, right? That's better than losing a few. Okay, so it all comes down to money management, protecting your capital. When you combine that with the probabilities of good trades, that's how you become consistently profitable. So there are people out there that are professional traders, and some of them I know personally, some of them I only know through social media, some of them I just know because I follow them just like other people follow them. Some of them get a bad rap. And what I mean is some people look at them and go, there's no way that that guy's making that kind of money. He's got to be doctoring this or he's got to be doctoring that. And even the guys that will show their statements, they'll have accounting firms verify yearly gains, stuff like that. There's people that are still going to be naysayers, okay? And vice versa. There's people out there that I can tell you, I can just tell by watching them, they consistently lose, and they have tons of followers. And people just blindly follow them because every once in a while they'll hit a great big trade. But they ignore like the 8 or 9 smaller to medium-sized trades that they consistently lose on over and over and over. So out of every 10 trades, they might hit one nice winner, and then they just ignore all the other stuff because they're not playing the probabilities. And I'm telling you, you'll never be consistently profitable that way. You will never be consistently profitable that way. Now, vice versa, go back to some of these other folks, and I don't mention people's names because I don't tear people down, and I'm not here to prop other people up either. Everybody does their own thing, but there's traders out there who are very successful that I know, and I know they're successful, and I'll watch these other people tear them down, and they'll go, oh, there's just no way, there's no way. And they'll make fun of their strategy or whatever. But I'm here to tell you, okay, I know some professional scalpers, and they make tons of money. They do take a lot of trades, so that means they pay a lot in commission, but still it's the amount that they make after commissions, after fees, after all that stuff. All that matters is what you make. So some of these guys will take little loss, little loss, little loss, big gain, little loss, big gain, big gain, big gain, little loss, little loss, little loss, big gain, big gain. And the key is what you're hearing me say, little losses and big gains. They're taking high probability trades, even though they're scalps, and their risk to reward is always positive. It's usually 3 to 1 or greater. Okay, and as I'm talking, you can see price is slowly working its way back down from the area where I said we were likely to get resistance. So back to these guys. And it's not glamorous, right? People want to see they want to see somebody enter a trade here and exit it here. That's what they want to see. And so the guys who trade trying to catch these, the one time they catch it, people are just like, oh my gosh, he called the top and he got the bottom. Oh, it's so amazing. He's so awesome. And then, like I said, they're totally blind to the fact that in between that one trade till the next trade that's like that, maybe he enters here and exits right there. Between those trades, there's 8 or 9 or 10 losers in a row that are way bigger than the one gain that they had. So they like the flash, the sizzle, right? You know, what do they say? Sell the sizzle, not the steak. The sizzle is what sells, right? And then you'll have these other guys who truly are the money makers. And like I said, I know a lot of these guys. I know some of them personally. And it's just, it might not be as sexy, you know, to trade that way. Or I shouldn't say it like that because to me it is, right? To me, it's all about the gain, right? It's all about the profit. That's all that should really matter. But these littler, so I'm just going to make something up. 3 to 1 risk to reward, and you're looking to make 300 and you're going to risk 100. So you stop out, a couple times, and then you hit your 300. And then you stop out once, and then you hit 2 or 3 of your 300s in a row. Then you stop out 3 times, but then you hit 3 300s in a row. Well, when you add it all up, you might be right around 50%, but you're up. And if you just keep doing that over and over and over again, your account just continues to grow and it compounds. Okay? So follow me, right? If you start with $1,000 account, which some people consider that small, some people consider that big. It depends on where you're at. If you start with $1,000 account and you're using a 3-to-1 risk to reward, so you're risking 100 to make 300, or you're risking 25 to make 75, whatever it is. I'm just trying to keep the math easy. So 100 to make 300, and you go 50%. So you won 5 times 300 is 1,500. You lost 5 times 100 is 500. You subtract 500 from 1,500. Now, we're not including the commissions right now. I'm just trying to keep the math easy because the commissions aren't going to be that much. But you made $1,000 on 10 trades. So now your account's $2,000, right? It was 1,000. You took 10 trades at 3-to-1. You won 5, you lost 5. You've doubled your account on 10 trades. Now, if you just do that over and over and over again, you'll keep adding 1,000. Well, at some point, I'm just going to make this up. Maybe when you get to 3,000, maybe at that point you say, you know what? Now I'm going to start taking twice the size. Okay, I've tripled my account. Now I'm going to take twice the size on my trade. So maybe you're risking 200 to make 600, right? 3-to-1. Okay, you're taking twice the risk to make twice the money. Okay, what's that going to do to your profit? Well, you figure it out. 5 times 6 is 3,000. 5 times 200 is 1,000. 1,000 minus 3 is 2,000. Now every 10 trades, you're making $2,000. Okay, you do that for a while. Maybe now you get up to 10,000, and now maybe at 10,000 you say, you know what? I'm going to triple my risk, because in reality you're not. Think about it, right? Because now your account is so much bigger. So now if you're risking 300 to make 900, just do the math. It just keeps compounding. And that to a lot of traders, like I keep saying the word sexy, it's not sexy or glamorous or glitzy, or it might not get the average person excited, but it should. It's way smarter to trade that way than to try to enter here and sell exactly right here. Because I'm just telling you, if you try to trade that way, you're not going to be profitable. You're not going to be profitable. So that's just a little bit of a rant on, you got to get your head right and get your head around the probabilities. Protect your capital and trade high probability trades. And be willing, I say this to my room all the time, and I know I've said it here on these free YouTube live streams, be willing to cut your losses quick. Okay, cut your losses quicker than you think you should, right? That's why mechanical stops are always better than manual stops if you can use them. And take your profits sooner than you think you should, right? So if you think you should take it here at 29.49.50, okay, I'm probably taking it at 29.49 or 29.48.75. Take your profits sooner than you think you should. That way, something like this doesn't happen where it gets there and it starts to go against you. Now, if you're playing options, you probably just lost all your profit. If you're playing a standard contract, you probably are, you still have decent money. Okay? Because it just depends on what you're playing. Now, I told you we would look at some different time frames, because what we want to do is we want to see, was there any better entries here? I predominantly trade on the 30-minute, okay, better signals, more consistent, more reliable, but I also consistently flip around on the 30, the 15, and the 5, just looking to see, are there other opportunities? Okay, so this is the 15-minute, okay? Do I see something on the 15 that I like? I do. Okay, now I don't necessarily like this wick here, but this is a hammer, right? I don't like the taller wick, but look where it is. It's above, right? It's above the 20. Now, again, I want to show you something. In real time, whoops. There we go. In real time, that's all you're going to see, right? You don't know what's coming next. So you got to make your decisions based on what you see in real time. So I know that from here to here, it's been moving down. Then we get a hammer or a hammer-like structure, a hammer-like doji. Okay, I really don't like this big of a topping wick. I want either no wick or a really small one, ideally. Okay, but this is something, because it got above the 20 at one time, if it gets back above and clears this and the 20, I'm looking to go in, and my stop would be just under this body. I keep my stops pretty tight. Okay, some people, when they enter, they're going to say, well, my stop's going underneath a tick below here. I just don't do that. The reason being is if it gets all the way down there and takes that out, there's a good chance it's going lower. Meaning you're not going to have a pretty good chance of getting back into the trade. If I get out here and it comes down a little bit lower and then reverses and goes the direction I thought, I can re-enter and I didn't really lose that much. All right, so now let's just see kind of how it plays out. All right, boom, there would have been my trigger. Okay. So it opened here, it went this direction first, then it went up, then it came back. So I'm in the trade now. My stop is going to be just below this body. Okay, this is not a trade I took. I'm just trying to show you from price action perspective. Okay, there we went up, there we came back down. Okay, now let's look. My stop would have been about right there. I would have got stopped out. Okay, but the stop would have been small. Now what happens? Oh, green candle. There we go. Now, when we get back up here, again, this is where I'd be looking to enter. Again, right here. Because if I believed this was the signal, it's still the signal unless we come down and take this candle out. All right, so yes, I got stopped out there, but I could re-enter right here again, which is really, let me see. It really is about the bottom of this candle. And then where would my take profit target be? It would be somewhere probably about the 50% mark of this wick. And why is that? Because opening price level in this wick could cause a bounce down. So let's look. Let's just say I like to be conservative. This is actually opened at 29.36.25. Let's say I got in at 29.37. We'll be really conservative. 75 cents later. And about 50% of this wick is 29.40.75. Okay. So what do we say? 29.36.70. $4 move. On standard contracts, $4 move. $200. All right. What would my stop out have cost me? Let's see. 29.33.50 from 29.36. So that's what, 2.5, right? Yep, $2.5, 50, 100, $125. So I would have got stopped out for negative 125 and would have turned right back around and made 200. So I'd already be back up plus 75. The two trades I took over here, I was plus 137.50. Now you add in 75. Now you're up to, what is that, 210? Am I doing my math right? 212. Somewhere around there, right? 137.50 plus 75 is 212.50, I think. 212.50. All right. You see how the trades have to work out in your favor. You're going to lose some, you're going to win some. Okay, now we come back over. Okay, now we've got a hammer to the downside. Shooting star. But is this the right type of signal to the downside? Is this the right type of signal? I would say no. Okay, why? It's just starting, right? These are 15-minute candles. Okay, we've been moving up here. Now we're starting like this. So do I consider this to be a momentum shooting star? Probably not yet, right? And look where the 20 is, right here. Okay, obstacle right in my way. So it limits my potential profit. Next candle, whoops, there we go. We're shooting right back to the upside. Okay, you see that? So you wouldn't have seen that. Okay, we're just playing them out in real time. Okay, now here was the one, if we go back to the 30-minute, we had the momentum hammer and we got the spike to the upside. This I would take. Why? Because look at this. See how we're trending up and see how it's further along, right? This was only the second candle here and we had an obstacle. That's why it wouldn't be looking to go short right there. This one, because of its location, the odds are it's going up. Okay, now yes, we do have the 200 right there in these wicks. That's what I said. You gotta, depending on where your stop is, okay, is it a risk you're willing to take? And if I squeeze this back in, I knew that right over here was a pivot that I expected it to get to. So to me, that trade would have made sense. Okay, and then you can even go to the 5-minute. See, we got a couple of new viewers there. Welcome if you're new. Nice to have you. Okay, let's look at the 5-minute. Okay, there's got to be a lot more noise on the 5-minute, but okay, in theory, and really this is the first candle on the 5-minute. See, 9:30. Okay, in theory, you're going to get more trading opportunities, but the shorter the time frame, the smaller the magnitude, and the lower the probability of, let's say, larger success. Let's put it that way. Okay. Why? Because of all the noise, right? Because of all the noise. Okay, so here, this would be a good signal on the 5-minute. A spinning top after a strong move up that bounced off of a moving average or a resistance level. Okay, I would definitely be looking to go short right there if I was trading the 5-minute. Okay, now where would my targets be? It's going to depend. Okay, I would be looking to see what happens here. This wick would scare me a little bit. Okay, I'd be looking to see what happens there. If you could get below that, then I would be looking at the bottom of this body just up from it, just up. So right about there, which is 29.30.75, and the low of this was 29.37. So about $6.25 move, and it made it easily. Okay. Plus, I wouldn't have wanted to get all the way back down into the 200, and you've seen what happened. It bounced there and went back up. Okay. Now, I want to show you. Okay, so this one would have worked great. Okay, here's the same setup right here. Same setup. Strong move up, spinning top, would have looked to enter right here. Okay, now where would my stop be on this one? I'm looking, I would probably put it this time right about here because I don't like to have big stops. Right, I want to protect my capital. So I would have got stopped out. Then I would have re-entered right here. I would have got stopped out again. See this? But then it came back down through. I would have re-entered again. And then I would have caught it all the way back down. And I would have been looking for just above the bottom of this body, right before the 200. Okay, so let's look. Okay, here's our entry, 29.37.25. Our stop outs at 29.39. Okay, so what did we say? Let me make sure I get this right. Okay, 37.25 and then 39. That's $1.75. So 87.50. 87.50 stop out. 80 right here. 87.50 stop out right here, and then we re-enter. Okay, so 87.50 and 87.50, 160, that's 175 down, right, that we're negative. But then we go all the way down to here, 29.30 from 237, 237.25 is what it was, but let's just say it's 237 down to here. My math is bad. 299. Oh, $7. $350 gain. So you would have got stopped out twice for 175, and then you would have followed that up with a $350 gain. Okay? Again, do the math. What is 175 from 350? It's 175. So now you're 175 to the good after those 3 trades. You add that on to the 212.50 that you'd already made, and you see how it starts to pile up. Okay, that's all trading is. Some people don't have the stomach for it, right? I know so many traders, they're going to get stopped out here and they just start belly aching. Man, that was a great signal and I did everything right and I got stopped out. Yes, it's going to happen, right? That's going to happen. Okay, well, it's going to get worse because you re-entered over here and it went against you again. You got stopped out a second time, but you protected your capital. Then the third time you get this all the way down here and you make $350 on one trade. Okay, these are 5-minute candles, so that $350 would have happened in less than 15 minutes. So I talked about this on a private stream the other day. It's all about transactions. If somebody said to you, you hand me $175 and every time you do, I'll give you back $350. Would you make that transaction? The answer is yes. Would you do it every time? The answer is yes, right? If it was that simple, you hand me $175, I'll hand you back $350. No strings attached. That's how trading works. It's transactional. So to be a good, consistent trader, you have to understand. That's why reading the book, Trading in the Zone, I talk about it all the time. We post the link in our room all the time. It's #1 on our required reading list, or I should say suggested reading list. Nothing's required. I tell the traders in my community, you should read that book at least 2 to 3 times a year. Okay, not just once, ever, 2 to 3 times per year. I do, and I've been trading for over 28 years. And I read that thing 2 to 3 times a year, okay? Now, the reason I say that is Mark Douglas talks in that book about how you have to think about the market. The market is not for or against you. It doesn't care who you are. It doesn't care who I am. The market doesn't know who we are. It has no feelings one way or the other. Everything that happens in the market is transactional. There's buyers and sellers, and at any given time, anything can happen. But he calls it an edge. I call it probabilities. If you stack the probabilities on your side, okay, he'll say if you have an edge and you let your edge play out over time, over a wider range of trades, you're going to profit. It's a mathematical certainty. The problem is, okay, human emotions get involved. And when somebody sees what they consider to be like a perfect set, I'm not saying this is perfect, but it's a good quality setup right there. And the first trade goes against them and they get stopped out, their emotions come into play. Their emotions are, I don't understand. We had a strong move up, a spinning top, bounced off of opening price level. I entered below the 20 SMA. It poked down below, I entered below, and it came back against me and stopped me out. Man, how did they know? How did they know where my stops were? They were stop hunting, right? That's how people talk. You convince yourself in your own mind that the market is against you, right? So then you won't take the next trade. Or you do and you get stopped out again. Now you're really ticked off. So now you're like, that's it. I'm not trading the rest of the day. The very next trade, you would have made $350 in less than 15 minutes. That's just how trading works. The people who are consistently profitable, they understand that, and they compare everything over a wider range of trades. 10, 20, 25, 50, 100. They know that if they play the probabilities over time, they're going to profit, and those profits will compound. Okay, it's no different. They talk about it in the book. They talk about it in a lot of different books. A lot of professional like hedge funds and institutional traders and all that, they'll use the same analogy. Trading is like you want to be the casino, you don't want to be the customer. Because the casino, their edge, and I don't know if you guys have ever read anything about casinos. Okay, I mean real stuff, not fictional stuff. Casinos have a much smaller edge than what you might think. Everybody thinks that the odds are stacked huge in the casino's favor. That is not true. The odds are stacked in their favor slightly, but they know over a wide range of transactions that little edge is just going to keep growing and growing and growing, and that money is going to keep compounding and compounding. And they also know that human emotion enters into the equation. I've talked about this before, and this might have been in the room. I don't know if I talked about it on a live stream. Casinos, the reason they love whales, okay, somebody might say, oh, did you hear about that guy in Vegas, some businessman from overseas, and he went in and he took the casino for $2 million, or I'm just making a number up. Okay, the casino could care less because that guy becomes euphoric and he thinks he's invincible, and over a wide range, he'll end up giving way more than that $2 million back. Because humans, right? That's why you have to fight that as a trader. You have to reprogram your mind, deconstruct and reprogram your mind to think differently. Because the way we think, we get euphoric and we think we're invincible, or we go the other way and we have fear and we think we can't do anything right. We never seem to live in the middle. It's either we're way up here, they call it greed and fear, right? There's indexes you can look up to see what trader sentiment is, where we at on the greed and fear factor. Okay, but when things are going your way, you get euphoric. You think you're invincible. I warn traders all the time. The more you're winning, that's when you should be reducing your size, not adding to it like a lot of Again, there's a lot of good trading mentors and coaches and gurus out there. But I see so many of them, hey, when you're on a hot streak, you need to keep adding in and play bigger size and all. Absolutely the opposite. Why? Because the probabilities are going to start to go against you, right? I've said this before. I got to say it again. If you win at a 60% clip, that's great, okay, in trading. That's a great win rate. You're better than 50%. We've already shown if you're 50%, you have a 3-to-1 risk to reward ratio, you're still going to make a lot of money. Okay, so at 60%, you're even going to make more. Okay, and it's a lot more. Okay, we've talked about that in other live streams. Just a 10% increase in win rate is a 40% increase in your profits. Why? Because of your reward to risk ratio. Okay, but anyway, that's a discussion for another live stream. If you're a 60% winner when it comes to trading, and you've won 6 trades in a row, what is the likelihood of what's going to happen next? Just from a strictly mathematical probability scenario, what is statistically the probability? You're going to lose, right? Because if you're a 60% trader and you've won 6 trades in a row, the probabilities are that you're going to lose your next couple of trades. Doesn't mean that you will. I'm not saying you will. But I'm saying if you play the probabilities over time, that's how you become consistently profitable. And I'm not saying don't quit trading if you won 6 trades in a row. I'm saying reduce your risk, because the probabilities are now going to start stacking against you. Plus your human emotion, right? I just won 6 trades in a row, man. I can't lose. Well, what happens, and a very good friend of mine who trades big size, I've talked about him before. Typical trade for him is about 20 grand. Okay, $20,000 invested in one trade. That's typical for him. He had that happen to him, and he went all in on a trade where he basically felt like, hey, I can't lose. This is my setup. It's the perfect setup. I'm on a roll. I'm stacking up money. And what happened? He lost it all, or 90%. Basically lost everything in his whole account because he was that overconfident. When again, I'm just using 60% as a number. If you've won 6 trades in a row and you're a 60% trader normally, I'm not saying don't trade. I'm just saying pull back the reins, okay? So if you're typically risking 100, okay, pull it back to 50, right? 50 to make 150, okay? You see what I'm saying? You just pull it back. You protect those profits, because now the statistics are going to start to go against you, the probabilities. So I hope that makes sense. I'm just trying to help everybody to think properly, All right, so here we go. We're still in the 5-minute here. We are going to look at some other names real quick, because I did tell you I have a 6-year-old supposed to arrive at my house around 3, which is in less than 10 minutes. Okay, here we had somewhat of a double top. Okay, price pulled back to the 20. What I would watch for here, especially after this resting candle, if we can clear and hold the 20, it's highly likely that we're coming back down to here, or even somewhere in this range right here. That's only if we can clear and hold the 20. Okay, so we might watch this just for a second or two. Yeah, you know what? I might not have time to look at any other names now that I think about it. And I do apologize, but I really wanted to cover the stuff that I've covered today. Okay, now why do I say that? If we can clear and hold the 20, why do I say it's likely that we're going to get back down around here? For you guys that are into technical trading, okay, whenever you double top or double bottom, okay, they always say, and the probabilities do play out quite a bit, that if you break the V, right, if you break the V, you're highly likely to return to the origin of the original move. So this being a double top, that would say that you're going to get back down into here. Okay, that would be the origin of the move. If it was a double bottom, okay, and say this was where you started and you came down and made a double bottom, if you take out the V on the double bottom, then you're highly likely to get back up to where the origin of the move started. Okay, so we're starting to move down here. Let me see, give me 1 second here. Okay, this is my sim account. Let me go to 5-minute. All right. What happened here? I think I know what might be happening. Because that's the first time it's ever said anything about real-time data, and it told me that during until your account was funded, that you would have real-time data. And then once you fund your account, then you have to select which real-time data you want. So once I get off here, I'm going to check. They may have finally got everything handled. All right, so I was thinking about entering, but that's okay, no big deal. I don't know if I can do it like this or not. Nope. So I think that's what's happened. That may be a good sign, but right there's our break. Okay, now if we hold that, but I would have been looking to enter right here with a stop right above the body, right there. And then my take profit target would be the top of that body, 241.25. Yeah, 241.25. And I would have looked to enter right there, 244.75. So down to there, that'd be $3.50 move times 12, times 50. Give me 1 second. 350 times 50 be $175 if the trade would play out, right? If the trade would play out. And so for those of you who are on my free YouTube live stream today, what you're looking at here, this is the Trade-of-8 platform. This is just how I have it set up. You can configure it any way you want. We're not going to go into that. But we're just looking to see if before I have to jump off of here in a couple of minutes, are we going to get the move back down here? Okay, that's all we're waiting to see. And it might not play out in the time frame that we need it to play out in. So while we're waiting, is there any questions anybody has with anything I've covered today? If you have it, I'm only going to be on here for just a couple more minutes and then I have to jump off. Let me know, and if it's something I can answer quickly, I'll be more than happy to do it. You can always leave it in the comments as well. But hopefully you've got some value today out of the things that we've covered and I've talked about. I like to try to talk about some different things every now and again. Okay, so Breeze is asking, basically what he's asking is, will small losses rack up too much in commission cost? Again, if your reward to risk is proper, you don't have to worry about that, right? Because commissions, so I mostly trade futures. I do trade equities. I do trade forex. I trade a lot of things. Okay, I mostly trade futures and futures options. And so on a futures contract, you basically are going to have, depending on what platform you're on, what broker you're with, some of them allow you to pay more up front to have lower commissions, but your commissions are going to be somewhere between, say, $1.25 to $2 per contract, right? So they're not substantial, right? So if you're playing one contract, one contract is going to cost you, if you're at even, say, the high end, $2, it's going to cost you $4 because $2 in, $2 out, right? So it's $4. So if you lost 2 in a row, that's $8, and then you win, okay, that's $12. So there's your commissions, right? And that's per contract. If you're somebody who plays a lot more size, right? If you're playing 5, well, then that's 2 times 5 on the way in and the way out, okay? So you got to factor that in. But again, I don't look at, most professional traders look at commissions that they have to pay as the cost of doing business, right? So I own a window company, right? I own a window company. That's what you see on my shirt right here. I have cost of doing business, right? I got to pay installers. I have to, do marketing. You have insurance. You have cost of goods. You got to buy the materials. You have to buy the windows. You got to buy caulk, silicone and screws and coil and stuff like that. That's the cost of doing business. Well, I don't look at that. Now, that's all factored in by my accountant, right? All I'm concerned with is, what do I profit? What is my profit margin when all my expenses have been taken care of, right? If I don't have very much profit margin, I'm not running a good business. Okay, vice versa. Again, it's two different things. In this kind of a business, you can't have too big of a profit margin or you price yourself out of business. But in trading, you want that profit margin to be as big as possible, right? I hope that makes sense. Okay, Rodolfo. Okay, Rodolfo is putting some info there in the comments. You can take a look at it. And Rodolfo, who do you use? Who is your broker, by the way? Just let us know there in the comments. We'll see who Rodolfo uses as his broker. Okay, so I'll jump back over here and here on ES. Okay, so as you can see, it couldn't hold, right? Didn't hold. I'm back on the 30-minute. Now it's trying to work its way back up. That doesn't mean that it's over though, right? This can reverse at any time. The statistical probability says once you break this, you're highly likely to get back down to here. So everybody keep your eye on that as we go through. We're into power hour now. And as you can see, as I'm saying, price is reversing and starting to head back lower. All right. So again, the probability is once you break the V here on the double top, that you're going to end up down in here at some point. So that's what we're watching for. I don't know if Rodolfo heard me or not. I was just trying to see what broker you're using. Oh man, TOS, like there's a lot of people that are in my community, the simpletradinglife.com community, have just been absolutely railing on Thinkorswim today. I guess it's been having all kinds of problems. I don't trade on it anymore. I used to be with them for years and years, and they were great at one time. And their quality is just, it's horrible now. And I don't know why. And I don't have time to talk about it. I still use their charting platform to do some analysis and watch things. They still have great charting features, probably the best out there. I've not been on every single platform, but them and TradingView and like TC2000, which I don't use, but I have some friends who are pros that like TC2000. You know, platforms like that, great for charting and analysis, but for trading, I use other platforms. So anyway, hey, I really appreciate it, Rodolfo. Thank you so much for the kind words. Well, guys, I got to jump off here. I don't even know. They may be out there right now waiting for me to get off because my wife told them they were going to have to be quiet if they got here before I was done. But thank you guys so much. Check us out at simpletradinglife.com. We have a free room and a premium room. You can check us out in either one. Definitely give us a thumbs up. That helps us with YouTube. Subscribe to this channel and turn on your notifications bell, and you'll be notified anytime that I go live or we upload any content. You guys have a great weekend. It's a holiday weekend. The markets will be closed on Monday, and we'll be back with another free live stream Tuesday at 2 p.m. So everybody have a great weekend. We'll see you later. Bye-bye.